If you're looking to make your money work for you, there are two main paths you can take: trading and investing. But if you're just starting out, you might be wondering, trading or investing? Which is best for beginners? Both options have their own perks and challenges, and in this video, we're going to help you figure out which one suits you best. Think of trading like a quick sprint. You're in and out fast, trying to make a profit in a short time. You could see results in a day, a week, or even a few minutes. On the other side, investing is more like running a long marathon. It requires patience, as you might wait years like 5, 10, or even 20 years to see your profits grow. Now, you might be thinking, if I can get quick money from trading, why should I wait for investing? That's a great question. It's exactly what we need to cover in this video. Both trading and investing cater to different styles and goals. By the end of this video, not only will you understand the major differences between these two, but you'll also have a clearer idea about which one might be the best fit for you as a beginner. So, subscribe to the channel and let's get started. All right, let's first understand trading or investing from a practical way. Imagine two kids at school, Alex and Jamie, who both love to collect and trade stickers. Alex likes to swap stickers quickly. He trades stickers he got just a day ago for new ones that his friends want right now. Jamie, on the other hand, holds on to her special stickers for a long time, waiting for them to become rare and more valuable, so she can trade them for a whole bunch of other stickers later on. Now think about this scenario in terms of trading and investing in the real world. Alex represents a trader. He's always on the lookout, making quick deals, trying to grab a small profit from each trade. He doesn't wait long. He sees an opportunity and takes it, much like buying and selling stickers rapidly among his friends. Jamie symbolizes an investor. She's patient and thinks about the long term. She waits for her stickers to become more sought after, believing that the longer she holds on to them, the more they will be worth. This is similar to someone buying stocks and holding on to them for years, waiting for their value to increase significantly. So, in the stock market, when someone buys shares and sells them quickly for a profit, like Alex with his stickers, that's trading. But if someone buys shares and holds on to them for a long time, waiting for their value to increase like Jamie and her stickers, that's investing. The big takeaway here is about timing. Trading is quick and active, aiming for profits in a short span, while investing is more about patience, holding on to your assets and letting their value grow over time. This distinction is crucial to understand as you decide which path might be best for you as a beginner. Now let's talk about what happens when you choose to invest. Imagine a group of friends who want to start a lemonade stand because they believe they can make a really popular lemonade. They do some research first, kind of like checking out the best lemons and sugar, to make sure their lemonade will be a hit. When they find a good recipe, they pitch in their money to buy the ingredients, make the lemonade, and set up their stand. As their lemonade stand becomes more popular, they start selling more and more. With the profits, they can buy more cups and maybe even hire another friend to help make lemonade faster. All the while, everyone who invested money in the beginning gets a share of the profits. This share is called a dividend. It's a way for the business to say thank you to their investors. Even though the big rewards come later, these little dividends keep investors happy along the way. And guess what? Some investors make quite a bit of money just from these dividends alone. On the flip side, let's consider trading, which is quite different. A trader is like someone who goes to the market and buys fruits to sell them the same day. They're not really interested in how good the fruits will be next month. They're focused on what's selling well today. They look at patterns, like which fruits sell best on hot days, and use that info to buy and sell quickly to make a profit. They don't really care about the long-term health of the fruit stand. They're all about making quick deals. In investing, the focus is on the company's long-term growth and health, just like our friends with the lemonade stand. They want to make sure the stand can keep selling lemonade for a long time. But traders, they're more like our market goers, looking to make quick, smart buys based on what's happening right now. Next, let's discuss the major differences between these two. Understanding these differences is key to figuring out which path might be best for you. First off, we talked about time. Trading is like a quick sprint. It's fast and happens over a short period. Investing, however, is more like a marathon. It's a long game where you wait and watch your investments grow over time. Now let's talk about risk. Trading can be pretty risky. It's a bit like playing a video game where you're trying to score as many points as possible in a short time. But there's a chance you might lose them all if you make a wrong move. With investing, the risk is generally lower over the long term. Even if the stock prices dip temporarily, they usually pick up again if the company is solid. Imagine trading as playing a coin toss game where you guess heads or tails. In the stock market, this translates to betting on stock prices going up or down. People place their bets through a broker, and if they guess right, they win money from those who guessed wrong. The broker takes a small cut, and the government also takes a share in taxes. But remember, in trading, if someone wins, someone else is losing. It's a zero-sum game. On the other hand, investing is more about gathering knowledge about a company and believing in its future. Instead of quick guesses like in trading, investors use something called fundamental analysis. They study everything about a company, like how well it's doing, its future plans, and overall health to decide if it's a good long-term investment. Stress is another big difference. Trading can be super stressful because you're constantly watching the market's ups and downs. Every little drop in stock price can feel like a stomach drop on a roller coaster. But with investing, it's more laid back. Sure, the stock price might dip now and then, but since you're in it for the long haul, these little bumps don't affect you as much. In trading, every day might bring new tension, wondering if you made the right call. But as an investor, you check on your investments occasionally, not fretting over the daily fluctuations. You know that over time, a good investment tends to grow, so there's no need to panic over short-term losses. By the way, if you're enjoying the video so far and want more topics like this, comment the word "more" so I know. Moving forward, let's discuss a big question that might be swirling in your mind. Is there more money in trading or investing? This is a tricky one, but let's break it down in a way that's easy to understand. Imagine you're at a fair, and there are two ways to win a prize. One game lets you win smaller prizes quickly and often, while the other game takes longer, but the potential prize is much bigger. This is similar to the difference between trading and investing. In trading, you can indeed make a lot of money pretty quickly. It's like playing a game where you can win several small prizes in one day. But it's also easier to lose money just as fast. On the other hand, investing might start slower, and you might not make a huge profit from just a small amount of money at first. However, thanks to compounding, over time your money can grow significantly. Think of it like planting a tree. It grows slowly, but eventually it can provide a lot of shade or even fruit. Now, with trading, you often end up paying more in fees because you're making a lot of transactions. Every time you play, it costs you a little. Investing, however, involves fewer transactions. You're more like someone buying a season pass to the fair. You pay once and enjoy the rides all season without additional costs. The fees are usually lower because you're not constantly buying and selling. As for learning, investing is generally easier for beginners because it's less hectic and less risky compared to the rapid pace of trading. In trading, you need to be very sharp and quick with your decisions, almost like a professional gamer. In contrast, investing is more like learning to ride a bike with training wheels before you speed off. Regarding taxes, both trading and investing have their tax implication. If you're trading, you might pay anywhere from 10 to 20% tax on your profits. For investing, if you hold your investments long-term, the tax rate on your profits, capital gains, can be 0%, 15%, or 20% based on how much you earn overall. And if you're wondering about the minimum amount to start, you can actually begin both trading and investing with as little as $100. In trading, this might involve quick, small-scale trades, and in investing, you could start by buying shares directly or putting money into funds. Finally, what you should actually do. Should you trade or invest? Let's find the answer that fits you best. Firstly, if you're just starting to dip your toes into the stock market, it's wise to steer clear of trading right away. You might have dreams of turning a small amount like $100 into $1 million overnight, but the reality of the stock market is far different. Initially, you might make some money, but there's a high chance of losing it quickly too if you dive in unprepared. That's why it's crucial to start with the basics. Investing is a great place to begin. You can buy shares, watch how they move, and get a feel for the market's pulse. This slower approach lets you build your knowledge and confidence gradually. As you learn and gain more understanding of how the stock market works, you can start to think about trading, but take it slow. Begin with small amounts of money and only increase your investment as your experience grows. The purpose of this video is to educate you on various aspects of investing and not to give you any specific investment advice. Investing involves risks and uncertainties, and you should always do your own research and consult with qualified professionals before making any financial decisions. However, past performance does not guarantee future results, and you should always consider the risk of investments before putting your money at stake. Now, if you found this video helpful, I highly recommend watching my next video, which is the perfect complement to this one. Thank you for joining us today, and don't forget, share, and subscribe to our channel. Your engagement is like applause for our efforts, and it motivates us to bring even more valuable content your way. So feel free to drop a comment below. I appreciate your support, and I'll see you in my next video.